China just told its biggest tech firms to stop buying Nvidia's AI chips. If this sticks, it could shut down billions in revenue for Nvidia and give China's homegrown chips a boost. Stick around and I'll show you 3 revenue paths Nvidia faces and what traders are watching next. Welcome back to the Rob Report, where money meets news. Today, we're breaking down what China's regulator just did to Nvidia, why it matters for the AI race, and how traders could react. Let's get into it. What happened? China's internet regulators sent a directive to the country's biggest tech firms, names like Alibaba and ByteDance, telling them to stop testing and cancel order for Nvidia's China AI specific chips. These were chips Nvidia had already watered down to meet US export rules. Now, China is saying, forget those chips, use local suppliers instead. Why it matters? This is a big deal for 2 reasons. First, China is one of the largest markets in the world for AI infrastructure. Losing that demand takes a bite out of Nvidia's growth story. And second, it's not just about sales, it's about platform share. If China's giants are pushed towards Huawei and other domestic chip makers, Nvidia risks losing long-term foothold in that ecosystem. The numbers. Here's the money breakdown. If the ban holds, Nvidia gets $0 from China. The rest of the world still buys, but China is off the table. Second, if there's a partial opening, Nvidia could see around $14 billion a year flow back in. That's about a 7% boost. And third, if things fully open, it's closer to $23 billion, over 12% upside. So China alone can swing Nvidia's revenue from anywhere from 0 to the tens of billions of dollars. That's why this headline hits the stock, how the markets might trade it. In the near term, this is a headline risk story. Stocks like Nvidia can wobble on each update, even if the fundamentals don't change right away. Long term, the optionality is clear. If China cracks the door open, Nvidia's sales pop instantly. But if China doubles down on local chips, Nvidia has to replace that growth somewhere else. What to watch next? Here are the signals that matters most, 5 of them. 1. Does China actually enforce this, or is it a guidance that fades? Second, do US regulators tweak export rules again? Third, are Huawei and other local players really shipping chips at scale, or are they just promising they can? 4, what does Nvidia say about China's orders in the next big earnings call? And 5, do US and European cloud companies pick up the slack in the spending? Trading take. Traders think in setups, not politics. So here's how they might frame it. A, if you're long on Nvidia, defined risk hedges like puts spread into headline weeks can protect you. B, if you're bearish, it's often smarter to pair Nvidia against other AI names with less China exposure rather than just shorting outright. And C, if you want upside convexity, cheap call calendars give you a lotto ticket on any detente headlines. With that being said, that brings us to the end of this video. You've been watching the Rob Report, where money meets news. Be sure to like, comment, and subscribe to stay up to date with news that moves not only the markets, but your wallet. And be sure to grab the PDF cheat sheet. Link is down below, and I'll see you in the next video.